Here's why this has merit. Now, the real potential, kind of big miners are making coin, getting awarded coin around 7,000. So the economics are still there to put money in the ground. But the big opportunity, the mega opportunity for Bitcoin, and why I stay long and why I continue to allocate to Bitcoin is when we get policy and institutions can allocate to it, sovereign wealth and pension institutions, they'll probably put 50 basis points, which is half of 1%, up to 1% into Bitcoin. And that's where you're going to break out of this range. How high? Nobody knows, because the demand is almost insatiable. Most large institutions want a position in crypto, and they want the granddaddy crypto. They want Bitcoin. They can't buy it yet. So for all of the excitement when we talk about institutional buyers, I'm also in the indexing business. I service the institutions and the sovereign funds with indexing. And they all tell me they want to index for Bitcoin, but they can't buy it. They don't have any policy. They don't have any compliance infrastructure. So we got to get this done. We got to get some policy. If it's just stable coins and Bitcoin, just those two asset classes, that's a huge win for everybody that's involved in crypto. Huge amount of capital come flowing in. When that happens, we don't know. The first indication would be allowing an ETF with the underlying asset being mark-to-market Bitcoin itself, like they've got up in Canada. That thing had billions in it as soon as it got announced. We don't have that yet. It just got turned down again. And that's why there's a war going on between the SEC and other regulators, a turf war as it might be, on who's going to regulate Bitcoin. We don't have to go crazy. We don't have to get 100 or 10,000 coins. If we could just get stable coin policy, Bitcoin policy, maybe Ethereum, maybe Polygon, maybe Solana, that would be enough. That would be huge. That's a large amount of market cap just right now in crypto.
Well, then let's discuss that at length, a little bit more length then. What does it look like when we do actually have that architecture and that framework for regulation? Because, you know, Thomas Lee over at Fundstrat has been shouting from the rooftops, regulatory clarity, regulatory clarity, regulatory clarity for the better part of a decade now on crypto. Because you're right, there's $100 trillion sitting on the sideline. If you put 0.5% or 1% in there, you're talking $500 billion to $1 trillion. That's almost double the current cryptocurrency market cap. That brings in retail, you're at 5 or 10 trillion overnight, more or less. So that's why I think it's so important that we look at the regulatory framework, like you're saying. But what does the roadmap on that look like? I've interviewed regulators on this channel before, too, and they think it's moving in the right direction, but there's still such a dearth of understanding from Capitol Hill on crypto. What are we looking at 2 years and we're going to have strong regulatory infrastructure where those sovereign funds are willing to come in big time? Or are we talking that this is going to take 5-10 years and crypto is going to have to really build this industry itself without the help of regulatory clarity and the institutions?
Well, you're asking the right question. Let me give you the lay of the land as of to this morning, as of right now. So we got a bill cooking right now just on US dollar and treasury bill backed stablecoin. That was going to be heard in August. It's been pushed till after the holiday, till September. The reason you would care about that vis-a-vis Bitcoin would be if we could get that bill done, and let me give you the nitty-gritty on that bill. It's not that complicated. The initiative started with the Toomey and Haggerty. They both had different bills. There's other bills, but it's all around the concept of this. Think about a money market, a Fidelity money market or a Schwab money market. There are rules about how those are built. They get audited every month, and they're not allowed to own assets supporting the money market unit price that have a duration of longer than 12 months. Same thing for stablecoin. It'll be the same idea. Look, if you're going to put out a coin and back it with US dollar, have a US dollar there. And if you're going to use T-bills, disclose how many T-bills you have and what the duration is, and let that be audited every month. Then we'd approve that. And the reason you got bipartisan support for something like that, think about, well, let's pick one, USDC. That's the one that was the most stable during the crazy Luna situation when algorithmic didn't work and it cratered. Not USDC because it was backed by the US dollar. So let's just say those kind of, not just USDC, but any coin or any token or any payment system that's going to be backed by a dollar sticks with those rules. That would be policy. And they're going to treat it, the way they're going to try and get around the whole issue is, you know, USDC or Ether or Tether or any of these things. Are they coins? Are they payment systems? Whatever. They're going to look at it and say, we don't care. Let's call it a payment system, no different than when you're transferring capital. It's going to be the same rules that we dictated in a money market fund, and then let the market compete. And so you're going to have different players with different amounts of T-bills, different amounts of cash. But the point is there'd be regulation for them. And the use of those as payment systems would become global, and it would be backed by the U.S. dollar. That supports the U.S. dollar as the default currency of the earth. What politician, regardless of what side of the aisle, doesn't like that? And so that's the likely first step. When institutions see that happen, let's say we get lucky and it happens in September, that's when the focus goes to Bitcoin. That's when the granddaddy asset, the one that everybody wants, that'll be the next chip to fall. And I think that's when the big opportunity is going to happen. That's after the midterms, after November 8th. The House is probably going to switch. A lot of Republicans are pro-digital, pro-crypto, pro-Bitcoin. All of that action is going to happen in the back end of the year and early in Q1 of next year. I think we can get policy and perhaps an ETF backed by Bitcoin sometime in the first 6 months of 2023. That's why you got to be long now. You have to, in my view, you want to be ahead of the market.
A really great point, because one of the things that we're looking at as we analyze the market is that there's a large confluence of factors both inside and outside of crypto coming together. First and foremost, you have interest rates. They've had a huge impact on Bitcoin. We're seeing 75 basis point interest rate hikes. Next meeting, September 20th to the 21st, the next FOMC meeting. We may end up seeing 75 basis points. CME is leaning in that direction with 60% likelihood. So if we see 75 basis points, okay, well, then we haven't plateaued interest rates. But if we see 50, and if not at this meeting, maybe the next meeting, we see 50 basis point rate hike, the Fed could start tapering that interest rate hike, maybe start printing money again in the next 12 months. The last time we saw that happen, despite a recession in the first half of 2020, we saw Bitcoin explode 1,500% in the span of 250 days, up to $65,000. So we have the potential over the next 3 months of seeing rate hikes taper, and over the next 6 to 12 months, the printer coming back online. On top of that, we have the Ethereum 2.0 merge slated to happen on September 19th. Now, it's been delayed 3 years, but if that does happen, that would be equivalent to basically a Bitcoin halving, with the amount of new Ethereum being its inflation slowed down by some project between 90 and 98%. That would be huge for the tokenomics of Ethereum. Then on the geopolitical front, you also, as you said, you have midterms coming up, and the House may flip, and Republicans seem to be much more open to kind of a libertarian stance of crypto, say, hey, let it develop and grow. You also have all the different factors that you just mentioned. In the next 6-12 months, are we going to see this catalytic event, this inflection point, where Bitcoin's downward movement since November 10th, when we hit all-time high last year, are we going to see that start turning around back into a bull market, because the fundamentals of Bitcoin are so much stronger today than they were 12 months ago, despite the price being 70% lower?
I agree with you, but the thing that's holding Bitcoin back, everything you said there is correct. I'm not sure about, ETH 2.0, because, wow, they keep bringing dates and coming and going. It hasn't happened yet. I'm a bit of a
I'll believe
skeptic,
it when I see it, yeah.
Yeah, I'll believe it when I see it. And I've talked to some of the proponents, and there's a lot of people that are conflicted on that situation. Bringing down gas fees is not in everybody's favor. Obviously, if you're collecting the fees, you like them as they are. But I think it doesn't matter. These projects are all worth owning because you don't know who's going to win. But when it comes to Bitcoin, the floodgates themselves is compliance infrastructure at the sovereign fund level, the Norway fund, the Saudis, the United Arab Emirates, our own states, pension plans. If we were calling that asset, whatever we're going to call it, a commodity or a security, and we got that done, I don't care which direction it goes, why wouldn't you be allocating to any portfolio a portion to Bitcoin, just like you would for real estate, just like you would for stocks, just like you would for bonds? That would really change the dynamic on Bitcoin. And when that happens, you have to make a decision. Do you get ahead of that curve, not knowing when that actually is going to occur? Or do you wait until it occurs? Because it'll be, in terms of price appreciation, I believe it'll be dramatic. It'll be dramatic. You could have a gap up 10, 15, 20, 25% overnight because you've opened up trillions of dollars worth of access to a new asset class. That doesn't happen too often. And I think all of the productivity and all the people that are working on the blockchain and all the projects out there, and I always remind people, Bitcoin is not a coin, it's software. There's lots of really smart guys leaving colleges that are engineering and moving to the United Arab Emirates or the Caribbean islands. They don't stay stateside because they don't have any policy. So all that intellectual capital could come back stateside. There'd be a lot of things happening once we get policy, once we get regulation. And I think you're right. The timing is probably 6, 12 months. But Katie, bar the doors when that happens. It's going to be really wild.
Being someone with a lot of background in software, I'm sure you've heard of the S-curve of adoption, where different technologies, the internet, indoor plumbing, microwaves, personal phones, cars, Google, anything, kind of just goes through this period of really fast growth. And we've talked a lot about the S-curve of adoption on this channel, and a lot of times the S-curve of adoption happens at around 7 to 12% adoption of the broader community that ever would adopt it. So let's say 3 billion people will adopt Bitcoin at one point. By the time you get to 7, 10, 12% of that takes off like crazy, and you ramp up to 30, 40, 50, 60, 70, 80% market penetration in the span of just a very short period of time. And a lot of people have been looking for this inflection point on Bitcoin back in 2020. Oh man, was that the inflection point when Bitcoin was going up to 65? Were we going to moonshot straight to 500K because that's the beginning? I don't think that inflection point has happened. I think, there are different numbers that people present. Oh, we've got 10%, 15%, 20% adoption of Bitcoin. Maybe that many people have bought $5 of Bitcoin on Robinhood, or they've opened a Coinbase account, but the number of people that are actually building part of their lifestyle in crypto, I imagine you'd agree on that, probably 1 to 2% of the global community that has internet access. The S-curve of adoption is something that I've been really fascinated by over the last several years. When you see Bitcoin getting up to $100, $200, $300,000, and we start seeing, 2, 3, 4, 5 times more people in crypto than we saw in the first half of 2021, is that when that inflection point is going to happen? And then game over, we're in 2001, 2002, 2003 for the internet, but this time in crypto.
Well, you're right. The theory of the inflection point is somewhere sort of 7 to 15%, and then it accelerates. I don't care what technology you look at. That has been the case, yep, including all the way back to pornography. So, I mean, it goes back to when the adoption occurs and how fast it ramps afterwards. But I'll tell you, there's two things holding us up right now. Let's stay specific on Bitcoin. The wallet infrastructure, whether you go centralized or decentralized, is shit. It's just not good. And I'll tell you, I don't mean, excuse my French, it is shit. And the reason I say that is it doesn't hook up to the existing compliant infrastructure for institutional investors. When they buy Bitcoin, it's very difficult for them to plug it in to their portfolio mandates, because all of the other assets, the majority of them, get marked to market at 4:01 in the afternoon, New York time. That's not the case for Bitcoin. It just keeps trading 24/7, as we all know. So if there's a disconnect to the way that their own compliance departments say, well, how do I monitor this for 24/7 trading? If you're using leverage, for example, or you're not allowed to own more than 5%, or you're not allowed to own more than 20%. There's all these rules by which institutions have to be compliant. So when I talk to these guys about, and the women who manage these funds, they say, look, I'd love to own some Bitcoin, but there's nowhere to fit it in. I don't have any infrastructure. The wallets aren't secure. You saw the Solana hack again. I mean, we got a lot of work to do as an industry to clean it up, whether you believe in the centralized or decentralized model. I don't care. I use them both myself. But I have to admit, like everybody else in the nascent days, I've been ripped off on a decentralized wallet till I got the joke on security. Now it's hard to do that to me. But you have to go through the learning curve, and a lot of institutions just want to plug and play. So you want that rapid adoption. Let's clean up the wallet system. I don't care, both centralized, decentralized. Let institutions decide what they want to do. We heard the announcement that BlackRock's working with Coinbase. That's not going to really change much, because there's not many institutions that are going to use the fees that Coinbase has. They'll probably go to FTX or Binance to do that. But I'm not saying Coinbase won't give an institutional pricing, but it doesn't matter. There's no demand yet. We need to fix the compliance that you plug in, whatever register you've got, whatever wallet you've got, works right into your system. And that's the kind of stuff I'm working on. I mean, I talk to so many banks, so many institutions. It's always the same story. I call up compliance. I want to buy $1 million worth of Bitcoin. They just say, no, no, nanette.